Well, hello, everybody. And hey, I haven't seen a lot of you in a while. I actually do wear cowboy hats in Las Vegas. It's Ken Winans from Winans Investments. And look who came to visit me in Las Vegas. Hi, Stephanie.
Hi, Ken. How's it going?
How's it going?
Very well. Thanks for having me.
Well, hey, we thought it'd be really good to get together and talk about what's going on with the markets and your portfolios. I know you all had a chance, hopefully by now, to look at your June results because it's already it's August.
It's August already. I can't
So,
believe it's August.
Steph, I'll tell you what, I'm proud of what we've accomplished this year. I really am. You know, folks, this has not been an easy market. There's been a lot of volatility. And you know what? I know a lot of you are very scared. I mean, you read the scary headlines.
Yeah.
I get mad about it actually because I think a lot of things are taken out of context. But anyway, I'll give you my 2 cents and then Steph will give you hers. Okay, first off, I want to talk about a couple of things that I've heard from you. First off, if you haven't, go read my last Forbes article. I've been around for a while. Many of you have been with me for over 30 years. We know what bear markets look like. I'm pretty good at detecting the storms before they arrive. It doesn't mean calling a top. It means using research to determine the health of the patient. Folks, the patient's very healthy right now. For those of you who watched Winning with Winans podcast, I did the last 2 episodes. I talked quite a bit about actually how it's not just tech stocks going up. We have industrial stocks, financial stocks, utilities. We've got companies in all different areas going up. The other very important thing, and Steph will talk about in a moment, bonds. I know you're all hearing about the bond market volatility and all that. What you're hearing about is the volatility in the treasury bond market and the municipal bond market, not in corporates. Steph, going to you on that.
Yeah.
Can you find good bonds right now?
You can. So here's the problem. The yield's a little bit lower than where it was 6 months ago, a year ago. But you can still find bonds. What we're not seeing are defaults. I'm seeing calls. So much of our bonds have been getting called. It's
Now, what's a
hard to
call,
keep.
real quick? What's a call?
Calls when when a company wants to refinance. So what they'll do is they'll call a bond back, say the coupon's paying 6.5, and then they'll reissue a bond lower as the rates come down at 5. So they're just kind of refinancing their corporate debt, right? And so the bonds have been harder to keep. I'm having no problems finding them. The yield's down a little bit, but nothing crazy. For me, it's just trying to keep the paper that we have because I love the portfolios that we've made. It took blood, sweat, and tears to make these portfolios.
Yeah.
I just want to keep them. And that's been the toughest part, has been the calls, actually.
Well, and then also we made a decision as a team to buy more preferreds.
Correct.
So you're all going to notice. So look, when you look at your portfolios, we have this stock. Is a preferred a bond or a stock? It's an it.
Hybrid.
Okay. It's what they call them preferreds.
Yeah.
But the bottom line for you who have in your portfolio, we're buying them for the dividends they pay. Okay. We're not buying them to try to make money on the price. So just be aware, you're going to see more of those in the portfolio because quite frankly, the yields are high.
Yeah.
You know, they're really, really good.
Agreed.
Okay, other things that you're noticing. You've talked to the clients a lot. What are you hearing?
Well, the number one comment that I'm hearing from clients is it's more of a question. They're positing, is this a bubble? I know you've heard that a couple times. I've heard it a few times now. I don't think it's a bubble. I think that is it a melt up? Is it a bubble? No. Is it overstretched? Are the multiples a little high? Maybe, yeah, you can make that argument for it for sure. I do think that the overall health of the market, the health of the market is actually really strong. So if you look at the how many companies are above their 200-day moving average, it's actually high across many sectors.
Which means they're in uptrends.
Yeah.
Yeah, they're going up. They're not going down.
Yeah, exactly. So for me, it's is the market a little stretched? We've had a really nice run for the last few years? Yeah, absolutely. I mean, since 2022, in reality, they've all been positive years.
Yeah.
Some stronger. We're having probably the best year we've had in a long time. The alpha, which is the overperformance compared to benchmarks, is very high this year compared to the average year right now. The rotation that we made was really good, and I think our stocks are having a banner year. So, what you'll see actually yesterday. Sorry, today's the 4th, right? 5th, 5th.
Yeah,
Today's
it's a blur. It's one of those days.
So you'll notice though that yesterday I actually did a lot of trading. We took a lot of profits off the table. Any stocks that were starting to soften into the wind, we decided to trim our exposure to them. We did buy a few new names, but in reality, we were trying to just take a lot of profits yesterday. So you saw a lot of action in your accounts yesterday.
And which brings up a point we want to talk about. Many of you question about when there's cash in the portfolios. Let me just tell you very quick, folks. It is nearly impossible to be 100% invested 100% of the time. And I'll tell you what, even if you had a mutual fund or an ETF, they have cash too. They all do. Okay. It's just impossible. So I'm going to ask one thing of all of you. Look, I know you like to watch your portfolios. We're aware of the cash there. It's there for a reason. Now, some of you might have deposited new money. Many of you have to take advantage of this wonderful opportunity. But we don't immediately buy the next day. We take our time. This is the middle of earnings season still. We don't want to run into what can suddenly be a bad headline. Many of you might have remembered a couple months ago, although we didn't own it, IBM immediately dropped 25%, no questions asked. We don't want to step into that. We don't want to have an uncomfortable discussion with you as a client. So, but we just want you to understand, it is the summertime. There is volatility. This has been a very volatile year. We're going to hold cash when we think there's an opportunity. So like Stephanie has said, we've taken cash. We're going to find other things to buy, but we're just not going to, go into it the very next day. Another quick thing that I'm going to bring up is that, look, I know that for many of you out there, your theme, you read all the time about AI, you read about the Magnificent Seven stocks. That's all fine. We will own popular companies if they fit into our investment strategy. But personally, for me, I've said this a lot, I don't like celebrity CEOs. They make me very nervous because I'm talking about, when you actually know what a CEO looks like and you follow their memoirs and what they're talking to on social media, I'd rather go with a CEO who we don't know, and they could walk into any casino in Las Vegas, and outside of maybe having security, you don't know who these people are. I prefer that. So my point is, popularity contest is not what it's about. It's finding things that make money.
Well, yeah, and then let me jump in on this one fact. So we also had several clients that had called about the SpaceX IPO. So we have several new big IPOs still coming for the for the remainder of the year. We had some clients that participated in it. I'm not a big fan of it either. Big celebrity CEOs, all that kind of stuff.
Well, look where the stock is now.
It's doing terrible. Yeah, I totally agree. And here's the thing. The IPOs in general are just very volatile. They tend to pull back and retrace. And I just don't think it's a thing that most of our retail clients should really be in. Even big institutional clients, I don't really feel it's their place. I thought it was a little concerning. They also lowered the minimums. I mean, they were trying to pack every retail investor into that IPO. They lowered the minimums to 10 shares. That's insane to me.
Yeah.
So I wasn't a big fan. We did have a couple clients that participated in it. That was their choice. We educated them on it and whether we thought it was a good idea and it was appropriate for them. If there are some curiosity about the IPOs that are coming for the remainder of the year, we're happy to engage with you guys about that and discuss them. I'm just going to say in general, though, I'm not a fan for general retail clients.
Well, and I'll just say this very quick. Look, I worked at the big firms that used to do initial public offerings. It's a business unto itself, and they sponsor these for 6 months. But at the same time, there's a lot of complications here. You have people who work for these companies. They want to sell shares on the next round. It just, again, there's so many great companies out there to own. I just think that you have to look at that. Okay, a couple other quick things I think are important. Look, you're doing great right now, folks. In fact, let me just do a little victory lap here. I want you to think about this. For those of you who have a balanced portfolio with us, whether it's a 75 equity to 25 bond, 50-50, 25-75, our 50-50 portfolios are outperforming the S&P 500. You know what? Look, I'm sorry. You pay for performance, folks, and I'm very proud of what we've accomplished this year. I'm not trying to brag, but you have to, every now and then we all need to be on top of that. But with that being said, it's a good time. Okay, we're having a good time with this. But I would ask this. You need to talk to your accountants and your other advisors before you get into the fall. If there are some tax issues that you are worried about, please look at your report, especially when you get your September ending report. There will be a realized gains and loss segment in the back. Please make sure your accountants get that. We don't like trying to do fire drills at the very end of the year we do sell losses automatically. I mean, we're doing it now. So, but I just want you to be aware that there are going to be profits this year. You will have capital gains. And so be aware of that. Steph, anything you want to add to that?
No, absolutely. There's always a fire drill or two at the end of the year. We wish that you guys won't do that. We're just going to politely remind you guys now, talk to your CPAs. I do tax loss harvesting at the end of the year for all of our clients. I try to realize as many losses as possible and to offset what I can. There are years where they're just not there. Last year was a really good example. There was nothing for me to sell. So if it's there, I'll take advantage of it. If it's not, then I don't know. But we'll try to come up with a strategy with you and your CPA so that you guys are very aware of what's going to be happening next year for your tax bill.
Yeah, exactly.
Yeah.
Hey, we always have to bring this up, but again, please just take it for what it's worth. Many of you out there have put investment restrictions on your portfolio. You have told us under no condition are we to sell certain stocks or to do certain things. Look, you're the boss. Okay, if that's what you want, that's fine. But I do ask that you remind yourselves that you have put restrictions on us. We have it written in our agreements that we remove restrictions at the end of the year. If your feelings about restrictions have changed for any reason, please let us know. Because again, we don't have time to go around and talk to everybody about, hey, you put a restriction on this or that or here or there. So just remind if you see something in your portfolio that, that seems out of character for what we typically buy, please get a hold of us if you want any changes.
Yeah, I would agree with that. Yeah.
All right, Steph, what else we want to cover?
I mean, I think it's just good. We try to do these updates at least once a quarter. It's really nice to check in with everybody. Like I said, we're having a really good year this year, which is really nice. For me, I think what's going to be interesting moving forward for the rest of the year is really what the Fed does. I think that's going to be interesting. I think Warsh is more hawkish than I think people were expecting. I thought he was going to be more dovish, to be honest. I don't think the rates are going to change anytime soon. I know a lot of people had forecasted another cut this year. Now I'm kind of skeptical about it, to be honest.
I think just in the year where we're at. That's what I think too, actually.
The mid-year elections are coming. Those are actually always a good thing for the market. A lot of investors tend to prefer a split government. So actually, if Trump lost a chamber, that tends to be a bullish reaction from investors. So that's actually not a bad thing if that happens. I wouldn't worry about that. I'm hoping it's been a little bit more volatile this summer. Definitely earnings season this time was a lot more volatile. Say, for example, 10 out of 100 stocks last quarter had huge swings one way or the other. This time it'd be close to 15. So it's not a demonstrable large amount, but it definitely was more volatile for sure. But I'm hoping for a Santa Claus rally. I think this summer, we're almost there. It's August. I think that, maybe a little interesting for the remainder of this quarter. But then usually the fourth quarter, statistically, I mean, I know Ken has these stats on his head, at all times. They tend to be the most positive for the year. So
November, December, January, markets are historically up more than 1.5% per month, 72% of the time.
Yep.
So,
Exactly.
I mean, I know these are the back of my head. Hey, which brings up a good point. Call it shameless self-promotion. If you have money sitting in another account somewhere that's not making you any money, if you're looking at timing things, this is not a bad time of year to have money begin to move into the Winans portfolios. We will, and going into October, November, December, January, all the way through May is a great time to make money in the markets. So if you think you're going to want to deposit money, please give us a call. We'll give you some ideas of whether it's in bonds, it's preferreds, it's stocks. Just let us know and we'll try to help you with that.
Agreed. And actually, we've had several clients that have come to us lately that said they've been talking to their friends and their friends are very upset at their portfolio's performance. And they've been telling them what we've been doing. And so we've had some referrals that way. So if you have some friends, some family members, again, that are complaining about their portfolios or concerned about what they're doing, we're always happy to give a second look at a portfolio and let you guys know our honest opinion and feedback about it. There's a lot of good, what I call car salesmen in our industry. They talk a really good game, but they're not actually really good at their job. And we really don't want people to miss out on the opportunities that we're seeing in the market just because they are maybe afraid to move or they're not sure if their guy is good or not. We'll give you the honest truth.
And while we're on that, many of you know we actually offer now complimentary financial planning. Stephanie and I are going through the Kaplan School. We've actually, I'm going back to school. But, a lot of it's stuff I had already learned in my master's in finance and all the other things. But here's the point. Several of you have taken our offer on it. If you think you want to do a financial plan, maybe you're eyeing retirement, you have some life-changing thing, ours is actually very thorough. We jump into inheritance issues, gifting issues, nonprofit issues. We get into a lot of areas that a lot of their people who offer these kind of things don't even talk about. But if you're interested, contact us. Again, it's a complimentary service. Now, if there's something you need, we have a network of advisors that, whether they're in California or they're in Nevada, that we can help you find. Okay, so, but start with us first. I know there's a lot of people out there who say they're a one-stop shop. They do everything. Folks, I've been in the game a long time. Nobody is good at everything. Okay, so my opinion is start with us first. Let's see what we can do for you. But anyway, Steph, what else do you want to talk about? Anything else?
I think it's just good to touch base with everybody, check in and say hi. I think, I'm here in Vegas for a few days. Ken and I have been doing a lot of work, which is always good to touch base, but I'll go back to California.
There you go. Yeah,
tomorrow.
Yep, like I said, we're growing and wandering. Listen, we want to thank you to be Winans clients. We're certainly happy you're happy with everything. As far as next round of face-to-face meetings, definitely talk to Alana. We're looking at January, so let's get your year-end reports. January through February is a great time to get together with us face-to-face. I will be making trips. Stephanie's coming out to Vegas. You'll get a chance to talk to one or both of us during these things. But anyway, folks, enjoy the rest of your summer. Know that we've got this handled. We're not, we're here doing our thing every day. And again, thank you for your business. We appreciate it. Take care.